Thanks for tuning into this edition of Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. We have plenty on our plate today, so let's get started with the day's highlights. Despite a rather pessimistic outlook for conditions this year, Korea's 30 largest conglomerates are looking to step up investment and dig deeper into their pockets. Korea is eager to open the door of new opportunities in Iran, with the oil-rich nation free from heavy international sanctions since January. These stories and more coming right up. To cut or to freeze? That's the question Korea's central bank faces on Thursday as it sets the key interest rate for this month. As for market expectations, they're leaning towards a rate freeze, but with the country's fragile economy, a rate cut is not completely off the table. Our Hwang Jae has this report.
Ahead of its monthly monetary policy meeting on Thursday, Korea's central bank has been under mounting pressure to pep up the economy, which has been suffering from unfavorable conditions at home and abroad. As of last month, exports had plunged for over a year, while key indicators of domestic demand in January, like retail sales and facilities investment, also dropped.
We see a rate cut being possible in March. Combined exports from January and February were down 15%, and in general, sentiment is at a record low, excluding the period during the global financial crisis.
Negative interest rates introduced in Japan and the European Union have fueled expectations that Korea will also lower its key rate, which already stands at a historic low of 1.5%. And with one dissenting vote calling for a rate cut in last month's policy meeting, the likelihood of the BOK inching toward more monetary easing has increased. But some economists say a rate cut should not be seen as a cure-all.
The central bank has to be sure about the specific effects a rate trim would bring to the economy, but conditions now are very uncertain, making it hard to determine the impact.
Adding to this is the country's massive household debt burden and risks stemming from massive capital outflows. Positive jobs data from February out of the U.S. has made it more likely that the Federal Reserve will remain on track for rate hikes down the line, making it tricky for the BOK to focus solely on boosting recovery momentum. The replacement of 4 of the central bank's monetary policy board members scheduled for next month is another issue that market watchers are eyeing. They say it's unlikely that members will make a move for a rate cut this month since it'll leave fewer options for their successors. But there are still expectations for an additional cut within the first half of this year. Hwang Jae, Business Daily.
And this new data might make it even harder for the central bank to move toward a rate trim to boost the economy. The Bank of Korea says the country's household debt climbed quickly again in February, despite a new guideline that tightens screening of borrowers. Household loans extended by local banks rose roughly $2.5 billion last month. That's much faster than the $1.7 billion increase posted a month earlier. Still, February's figure is smaller compared to the $3 billion jump recorded in the same month last year. The central bank's data also show that around $3.5 billion worth of foreign capital left in Korea's bond and stock market last month. In January, Korea saw a $2.5 billion drop in foreign investment. Cautious optimism is on the rise for improved global economic conditions as raw material prices rebounded after falling to a 14-year low last month. According to Bloomberg, the CRB commodity index stood at 171.7 on Monday. Now, that's a near 11% jump from just over 155 in February, which was the lowest since March 2002. The index is based on prices for raw materials, including crude oil and copper. On the New York Mercantile Exchange on Monday, West Texas Intermediate for April delivery settled at $37.90 a barrel, up nearly 45% from its low point last month. Copper prices rose to a 4-month high on the London Metal Exchange on the same day, up 15% from the 7-year low recorded in January. But experts warn that the upward trend could be temporary, especially if the U.S. Federal Reserve decides to raise interest rates again. Despite their gloomy outlook for business conditions this year, Korea's top conglomerates are planning to boost investment by more than 5%. Our Park Ji-won tells us more.
The Federation of Korean Industries has released its report on the annual and midterm investment plans of Korea's 30 biggest business groups. According to the breakdown released on Wednesday, the conglomerate's total investment in 2016 will exceed $101 billion, up 5.2% from the previous year. The on-year increase comes mostly from investment in facilities, which are set to rise more than 7% compared to last year. Investment in R&D remains at a similar level of some $26 billion. Out of the 30 groups, 18 will boost investment, 3 will remain static, and the remaining 9 will downsize their investments. Looking at it group by group, Korea's biggest conglomerate, Samsung Group, plans to invest $12.8 billion in a semiconductor complex in Pyeongtaek, south of Seoul. Hyundai Motor Group plans to invest over $10 billion in smart and eco-friendly vehicles. SK Group is going to invest $4.5 billion in new memory chip plant and invest another billion in network infrastructure. LG Group plans to invest some $8 billion in LCD production by 2018 and another $3 billion in a state-of-the-art R&D complex in 2020. 80% of the 30 groups have a negative outlook for this year, saying general economic conditions will be worse than last year. However, most of them expect the economy to improve from late 2017. Park Ji-won, Business Daily.
Mergers and acquisitions here in Korea reached an all-time high in deals value last year, ranking third out of all Asian countries. According to Korea Capital Market Institute, over 360 M&A deals in the country amounted to a record $87.5 billion last year. With the latest figure, Korea ranks third after China and Hong Kong. Since 2012, Korea's M&A deals value has shown an average increase rate of 43.7%. The uptrend is forecast to continue with the so-called one-shot law passed last month, designed to help companies eliminate excess capacity and improve productivity. Last year, big business groups SK and Samsung respectively merged some of their units, making up over 40% of the total value. Korea is home to the largest gender wage gap among OECD countries, according to a report released on Tuesday, just in time for International Women's Day. Among 36 member countries, Korea came in dead last, with a 36.7% pay gap as of 2014, significantly larger than the OECD average of 15.6%. Now, that means Korean women only receive about $63 for every $100 men are paid. Hungary, on the other hand, had the smallest gender pay gap at 3.8%, followed by countries like New Zealand and Belgium. The OECD said Korean women also have a much lower employment rate, with less than half holding jobs, while every 7 out of 10 men are employed. Countries around the world are aggressively trying to talk business with Iran, as the opening of its market is expected to bring about ample opportunities. And also eyeing new opportunities is Korea. And to tell us more about what the country is doing, our Kim Min-ji joins us in the studio today. So good to see you, Min-ji.
Hi, Jean. So the economic condition for the Korean economy doesn't look too good. Like in the face of slow global economic growth, especially in China, which is Korea's biggest trading partner, exports have been slowing and domestic consumption has been slow as well. It's been dull. But now that the international community has lifted the sanctions on Iran, which have been in place for as long as 37 years, Korean businesses are looking to seek new business opportunities in Iran.
Now, I'm wondering, what makes Iran such an attractive market?
Well, as we all know, its resources are very abundant, and geographical location is another key point we need to take into account. It's near the Gulf nations, West and Central Asia, so it has great growth potential. And its nominal GDP has also been on a steady rise, with the exception of a few years, as you can see in the graph. And as of last year, it stood at almost $40 billion US, and it's expected to grow by an average of 4% every year until 2020. Now, it also has a fairly large population with a median age of 29.5 years, and more than 70% is economically active. So Korea, like many others, is hoping the opening of Iran will provide a breakthrough for the economy. Will the opening of Iran's economy provide a much-needed shot in the arm for Korea? Since nuclear-related sanctions imposed on Tehran were lifted early this year, Seoul has been stepping up efforts to boost its economic ties with the Middle East country.
Iran's market has reopened. Its economy is expected to grow 5.8% this year and 6.7% next year. And the country is forecast to lead economic growth in the Middle East and North African region.
Last month, more than 500 Korean and Iranian business figures met in Tehran, where a handful of deals were put in motion. Korea's top steelmaker POSCO, for one, signed a memorandum of agreement with Iranian steelmaker Pars Kohan Diyar Parsian Steel to jointly build a steel mill in one of Iran's free trade industrial zones, worth some $1.6 billion US. The steel mill will be built using POSCO's Finex technology, which is said to be more environmentally friendly and cost-efficient. As Tehran seeks to rebuild and improve its infrastructure, analysts say business opportunities will be plentiful. That's why another big beneficiary is expected to be the construction sector. Iran was the fourth largest construction market for Korean builders before global sanctions were imposed. But with global oil prices faltering and tensions running high in the Middle East, order cancellations have climbed, dealing a significant blow to Korean companies. But now, in the post-sanctions era, Iran's construction market is poised to grow over 7% this year.
It's important that we establish agreements to cooperate with our Iranian counterparts. Another key point is that we do so before our competitors do.
Also expected to see a ray of light are local shipyards, which have been suffering eye-watering losses. Although official discussions have yet to come, insiders forecast Iran will order merchant vessels worth over $1.6 billion annually over the next 3 to 4 years.
Korea has a competitive edge in shipbuilding, especially for vessels that require top-notch technology. Once Iran steps up its oil production for exports, the demand for oil tankers will inevitably climb.
Analysts say it's now up to the government to support Korean businesses and help them break into the market and better compete with existing players. This can come in the form of financial support, expanding payment systems, as well as devising strategies that set Korea's technology and price competitiveness apart from others.
You know, Korean companies have long seen Iran as a very important market, and a lot of them have presence there already. So how has bilateral trade been?
Well, Korea's exports to Iran reached about $3.8 billion in 2015, and that's down about 10% from the previous year. Seoul's outbound shipments to Tehran have been dropping an annual of 2.5% since 2010, and that's a sharp drop from the 20% range growth it had posted before stronger sanctions took effect. Now, some of Iran's major import products include machinery, steel, and automobiles, so these sectors are hoping to benefit from the market opening.
Well, you know, Korea is not the only one looking to expand cooperation with Iran. A lot of countries around the world are trying to do the same, so there must be fierce competition for this.
You're right. Potential competitors have already been busy and actively engaging in business talks in Iran. And according to the Organization for Investment, Economic and Technical Assistance of Iran, for 9 months starting March 2015, a total of 145 business delegations from 47 countries have visited Iran. Now, even even heads of states have made their own visits. For one, Chinese President Xi Jinping made a visit early this year and agreed to boost their trade volume by 11-fold over the next 10 years. So Korea isn't really considered a first-comer, especially since countries like China and India kept their presence strong in the Iranian market, while Korea imposed sanctions of its own on the Middle East nation.
All right, so what does Korea need to do now? I mean, what are some main issues that Korea needs to address at this point?
So, like I mentioned in the report, it's not something the private sector can do alone. It has to come with support from the government level. And experts say it's important for Korean companies to focus on what they're good at, and they need to be able to promote this. There also needs to be more financial support. Currently, Korea and Iran have their Korean won-based payment system in place, but experts say they have to expand the system to include other currencies like the euro or yen. And last but not least, Korea needs to be able to secure cheap oil from Iran as it's set to boost production. Now, the prospects for global oil prices is that they will fall further when Tehran reaches full output capacity. And the consensus among local experts is that in the mid to long run, Iran's increased supply will help local refiners and contribute to boosting the country's domestic consumption.
So let's definitely hope to see all those points that you mentioned happen in the near future. Thank you so much for coming in today, Minji.
Thanks for having me.
And that brings us to the end. Thanks for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.